Hello, folks. Talking about housing supply and how strong is the housing supply to you guys. There's metrics out there I don't think people are very clear on with regard to trends I've been hearing. People are going to dump their properties and people are going to dump their rental properties and this, that, and the other. And what does that look like? Okay, so that looks like if I'm a buyer, I might want to start getting my ducks in a row, and also if I'm a smart person that doesn't really own doesn't own very much on the house, why would I dump it when it's going up in value faster than the dollar bill? These are questions I just don't see the math equating very well, and I see where it comes from. But let's talk about boots on the ground equations. Are folks gonna want to rent again right now with COVID, and I can work from home, and those kind of things? And what I'm seeing too is that folks don't want to add to their bills right now, so they don't want to go and get into a situation where their life costs more, so they just assume not make a move. So where are we going to start getting a big supply um of houses, even though the buyer supply has gone down? Just because the buyer supply gone down, I don't think is a number we need to look at. And interest rates as well. Go back and look at history. And my parents were buying interest rates double what they are, triple what they are. Like, seriously. So, folks needed a place to live and raise their family back then. And I believe they need to do that even more so now and own their home in an inflationary environment. So, let's start talking. Tell me where I'm wrong. I know we can talk about our, supply and demand and all the charts and graphs that were before the pandemic that we just went through, right? But let's start asking ourselves honest questions. And what you're noticing is, even though there are a lot less buyers and a lot less sales, does this translate to a less strong market, which would be prices going down? Okay. And that's not what we're seeing. I mean, we're seeing them going down because of the shift in the market, those kind of things. But look at the numbers on that. Look at your own numbers. And what I'm seeing a lot is folks don't want to make their bills go higher. They don't want their monthly bills to go higher, and that's awesome. That's what I call locking in your lifestyle. Okay? So dig into that a little bit more. And my example would be um, the the home equity line of credit that I pulled out. I nuked some debt that were monthly payment debt, and that made my overall payments go down. So, I'm going to get a better board to be able to point these kind of numbers out. But say I have $600 in debt and I pull out $50,000 in a home equity line of credit, that only cost me $400 a month. So I pay off that debt, and I end up having more money to go buy the house down in the other house. So those are the real true numbers that I saw. At like, pulling the equity out, yes, is going to cost me money, but getting rid of bad debt and making some opportunities happen for $400 a month is truly the number. And we'll start to break these down more so. But I also realize it's a good time to just kind of share these ideas, because maybe I'll be wrong, and we'll have it all on video. Like, look at how wrong I was, and kind of love that. So, you guys have an excellent day.